Hey guys, welcome to the video. So in this video, I'm going to be teaching you guys when to buy and sell a stock and what my investing thesis is and how to practice my way of investing. So my way of investing is very different from a lot of people. My way of investing involves social research and social arbitrage techniques. So what does this mean? This means that I don't look at charts, I don't use technical analysis, which is looking at charts and indicators. I rarely do this. I'm actually going to talk about one indicator in this video, but I rarely do this to make me buy a stock. Some people use charts only based on charts and just watch the patterns and try to match the patterns. I will use charts to support my thesis, but I never use charts alone. So the next wave investor is fundamental investors. So fundamental investors look at the income statement, the balance sheet, how the company makes money, the revenue, and just the basics of the company and base a thesis off of this. Now this is what a lot of long-term investors use and a lot of value investors use, and they try to find the most undervalued stock there is on the fundamental side. But I've used this technique before, and some stocks are just not fairly valued, and it's always like that. Some stocks trade at a premium, and some stocks trade way cheaper than they should, and it never changes. These stocks just always stay the same. So that is why I moved away from fundamental investing, and I've tried every single way there is in investing. I finally found out my way of investing, which is social arbitrage and social research. I finally figured this way of investing out pretty recently, within the last couple years, and ever since that I've practiced this technique, I've made so much money off stocks. And I would say I win 70% of trades and lose only 30%, which is crazy. And a very successful investor wins 55% of trades. So I'm very confident in my way of investing, and it has worked amazing for me. In this video, I'm going to be teaching you guys and letting you inside my head of what my way of investing is and how you as an investor can start investing and base theses off the social research aspect of things. So the first question is, when do I buy a stock? I buy a stock whenever I believe that I have information that the market does not have, or I have read into hype and I can ride the hype wave up. So those are my two trades. And the first example is when I have information above the market. I have information up here, the market is valuing this information down here, and once the market finally realizes the information, it rises up to the price that I believe and the information that I know above the market. So for example, I will talk about Peloton with this one. So leading into Peloton earnings, I knew that I had more information than the market had priced in. I had researched all there was to know about Peloton, the company, and first of all, they were making so many bikes and filling every order they could, and they're still overloaded with orders. I knew this, and the market had not priced this in. And Peloton was barely up by the time that I bought in. And to stay at home, the Rona had caused everybody to stay at home, so that stay at home aspect made home gyms the #1 priority of people trying to work out, and Peloton is the #1 player in the space. And when I bought in, the market had not priced in these crazy Peloton numbers at all. So I had information above the market finally realized, and I gained like 300% on that position. So that's one example of having information above the market. So the second aspect of my way of social research investing is reading into trends and the hype data. So how do you do this? I have about 30 websites that I use to scan this data and this hype. But the #1 website that I probably use is Twitter. So I scan Twitter trends, Google Trends, G Trends. That is also the big one I use. So the two biggest ones that I use the most often is G Trends and Twitter. So take for example last weekend. I was betting on a big stock market crash on Monday, and the reason that I was betting on this is because I was reading non-stop about this fear that was going on of all these Rona numbers that people were super scared about. The only tweets that I was seeing about the Rona was very, very negative. There was almost no positive news. So I called for a crash that Monday. Now my thesis did come true. When Monday opened, the market was down like 3%. I took profits on my position. Now later that day, the market went crazy and it actually rose into the green that day. But my thesis was just kind of a small crash, a small quick crash, and I knew that it was going to happen on Monday. And that is one example of reading to the social research aspect of it, the G trends and the Twitter aspect of the fear that was going on. And another example that I'll use is this weekend. I looked into SINT and IDEX. I saw these tweets and these trends were going crazy for this stock. The hype was out of this world. So I knew buying in today, which is Monday, I knew buying in today, I could buy in pre-market, ride that all the way up, and then sell out at the peak, and that's exactly what I did. And I knew these stocks were going to pop today because the data was immensely hype. I saw a ton of big Twitter accounts talking about this, I saw articles on this, and I saw trends leading into these stocks. and people were just viewing these stocks, which leads to more buying pressure, which leads to a pop as soon as market opens. So I bought in pre-market, rode the pop, sold at the peak, and that is one way that I use the hype to play these social research and social arbitrage of these stocks. So the next thing I'm going to teach you guys is when to sell a stock. So when I sell a stock is when the hype reaches the max potential and the market has either priced in the information all the way or has overpriced the information into this stock. So I'll use Peloton and IDEX, Ideanomics as examples once again. So with Peloton, leading into earnings, the hype was immense, but I knew that it still wasn't fully priced in, so I held my big position through earnings. There was another 10% pop after earnings, and the next day there was another like 5% pop. So once the stock reached like $46, $47, I knew that the hype was overpriced and it would drop back down. And it did. It dropped back down to $40, and the reason that this happened was the post-earning numbers. People get FOMO, people buy in, and once the stock goes parabolic, that's when you know that the stock may be overpriced and you need to look in further to the data and see your thesis. So I looked into the data, I looked into the Twitter trends, and I saw that people were just riding this wave up and planning to sell. There was a lot of traders, there was a lot of day traders in this and swing traders that were buying into the stock with the thesis to sell out soon. So reading into this, I knew that I needed to sell immediately, take profits. So I had my original position built out under $30 and in the low 30s. So after earnings, after a couple days, when this reached $47, I sold my entire position. After reading into these trends, I sold it when it was overpriced for the time being, and then I actually bought back in once the overreaction played out and it got oversold again. So I bought back in around $42. So first of all, I bought at $30, I sold at $47, and then I bought back in at $42. So perfect play on my part, and this is what the social trends did for me. This is how I got led to make these perfect plays and these perfect buys and sells at the right time. So let's talk about IDEX for a second. I was talking about this weekend. It's my favorite penny stock to buy right now, and I actually called it being $10 sometime in the next year. So today I bought in pre-market. I made about 50% of my money midday, and I sold when it was about 75% up. So the reason that I sold this one is because once again it was overbought. The hype was way too overblown. Reading into the Twitter hype, I was expecting a 40 to 50% gain at the max. So once I saw this just keep going up, I was just thinking to myself, these are all day traders. These are all going to sell out, take profits. A couple institutions took profits on this one as well. So I knew that I had to sell before these people started taking profits. So I'll sell even a little bit early on penny stocks just to take profits. These penny stocks that can go up 80% in one day can also drop 50% the next day. So I do like to take profits as soon as possible with penny stocks whenever they have a parabolic movement. And there will be more time to buy back in, usually in the next few days. So that's my thesis on that one. And then I also use the Rsi Indicator, and that's how I tell when a stock is oversold or overbought. So I'll put this on the screen right there and look at the IDEX with the Rsi Indicator. When the RSI goes over 70, that means it's overbought. And whenever it goes under 20, that means it's oversold. And so under 20, it's very undervalued, and there's a lot more room to go up with the trader during the day. And when it's over 70, there's a ton of room to go down. It's very overbought, so this could crash at any second midday. So I sold it when it was very overbought, looking at this RSI indicator, which led me to make the perfect time and the perfect sell at the right time. So for those asking why I sold IDEX today, if I'm expecting it to go to $10 this year, the thing is, these parabolic movements with these penny stocks, I do sell out when we have 80% gain in one day, when we have 70% gain in one day. The reason is, it's because with penny stocks, they go back down just as fast the next day, which leads to much more buying opportunities, and taking profits on penny stocks is one of the smartest things you can do as an investor and as a trader. So to recap what I do as an investor, I read into social trends, I look through all the social media sites, I just read what's the vibe of the market, what's the vibe of the marketplace. I watch CNBC, see what they're saying, see if they're saying anything that could cause fear to go in the market. This is when you know it's a crash. And talking about the crash, I think we'll have a pretty big size correction pretty soon. So we need to keep watching this data, we need to keep watching these social trends, and read into when there's a ton of fear. Just like 2 weekends ago, I read into that fear, and once again, I do expect this fear to come about within the next couple weeks, so I'll be ready. I'll be scanning every single day looking for this fear and looking for the next crash so we can write it down and make a ton of money off this next crash. So one of the most important things you can do as an investor is just be aware of what's going on in the world, what's going on with these trends. Presidential speech, watch the J-Pal speech, printer go brr. and just do as much as you can. Have conversations with your friends, have conversations with their family. Just ask them questions, see what their responses is, because a lot of the time, they are what the general public is thinking. They have the views of the general public. Most of the time, they don't have these crazy views. A lot of these people just have regular views, and when they say, that's what most of the world says. So just have these conversations at dinner. Have these conversations over text. Call your buddy, say what's up, and ask him what he thinks is going to happen. Ask him if he's going to restaurants. Ask him if he's going out to bars. See if he's okay with social distancing, and see his thoughts on what he thinks is going to happen with the Rona. Just stuff like this, you need to read in the socials. Investing is a social game. And to beat the game, you have to read and beat the mental of other investors. And the best thing you can do as an investor is be emotionally strong and not have any crazy takes. Just go with the vibe of the market, and that's how you can capitalize. So I appreciate you guys watching. I hope you found this video very helpful. If you're interested in joining the stock group, right now it's $4.99 a month or $50 a year. But once we reach 500 members, which we're about 50 members away from reaching 500, the price is going up $9.99 per month or $100 a year. So I really do recommend you lock in this year price of $50 right now before the 500th person gets in, and secure your payment right now, because I will be increasing the price. It is just getting a lot of work. We have a ton of investors right now, and it is a ton of work to keep up with all this. So I do think raising the price slightly is the right move, and it's still very underpriced. You still get 10 times more value than you pay for. These other groups charge hundreds of dollars to be in per month, and I'm just charging soon to be $10, but lock in that $5 price or that $50 per year price while you can. So I highly recommend you join the stock group, lock in that cheap price. And if you're interested in getting 2 free stocks on Webull, the link is down below. One is valued from $14 to $1,400. And Webull is great because you get that pre-market hours. You can trade 4.5 hours before the market opens, and you get those post-market hours 4.5 hours after the market closes, which is amazing. Now I use a bunch of these to buy into the hype before the hype goes all the way up. So that is a big thing that helps me, is the pre-market trading, and I highly recommend you get those 2 free stocks. Thank you guys for watching, and let's keep on getting rich.